The U.S. stock market has been a wild ride this year, with tariffs, inflation concerns, and economic shifts keeping us on our toes. But amidst the volatility, there are some incredible opportunities for savvy investors. So, grab a notebook, and let's break down 3 U.S. stocks that I believe are poised for growth in July 2025 and beyond. Stick around until the end for a bonus tip on how to approach investing in this dynamic market. Before we jump in, a quick disclaimer. I'm not a financial advisor, and this video is for educational and entertainment purposes only. Always do your own research or consult a professional before making investment decisions. All right, let's get to it. Our first stock pick for July 2025 is Jabil Inc., ticker JBL. If you haven't heard of Jabil, they're a technology-focused manufacturing solutions company based in Florida, and they're making waves in industries like computing, automotive, telecommunications, and healthcare. Jabil helps big-name companies manufacture everything from smartphones to data center infrastructure and even cutting-edge healthcare tech. So, why is Jabil a top pick for July? Let's break it down. First off, Jabil's recent performance is hard to ignore. In June 2025, Jabil released its Q3 FY25 earnings, and they absolutely crushed it. They beat earnings per share estimates by 10% and raised their guidance for the full year, which sent their stock soaring to new highs. Analysts now expect Jabil's 2025 earnings to be about 5% higher than previously forecasted, and their 2026 estimates are up by 9%. That's a strong signal of confidence in their growth trajectory. Jabil's strength comes from its diversified business model. They serve multiple industries, which helps them weather economic ups and downs. For example, their work in cloud and AI data center infrastructure is a big growth driver. With the ongoing boom in artificial intelligence and cloud computing, companies like Jabil are in high demand to build the hardware that powers these technologies. Jabil recently announced a $500 million investment to expand its U.S. manufacturing footprint, particularly in the Southeast, to support AI and cloud infrastructure clients. This move aligns with the broader trend of onshoring, bringing manufacturing back to the U.S., which could benefit from favorable trade policies in 2025. Let's talk numbers. Jabil's stock has been a strong performer, but it's still reasonably valued compared to some tech giants. As of late June 2025, Jabil's price-to-earnings ratio is around 15, which is lower than the broader tech sector's average. This suggests you're getting growth at a reasonable price. Analysts project revenue growth of about 10% for fiscal 2025, driven by demand in AI, automotive, and healthcare tech. Plus, Jabil's strong cash flow allows them to reinvest in growth while returning value to shareholders through share buybacks. Now, no stock is without risks. Jabil operates in a competitive industry, and any slowdown in global demand for electronics or supply chain disruptions could impact their margins. Additionally, their heavy reliance on a few key clients means that losing a major contract could hurt. That said, their diversified client base and long-term contracts provide some stability. If you're looking for a tech stock with exposure to AI and onshoring trends without the sky-high valuations of some semiconductor giants, Jabil is a solid choice. So why buy Jabil in July? The start of Q2 earnings season is just around the corner, and Jabil's recent beat-and-raise report suggests they could deliver another strong quarter. With the market showing optimism, evidenced by the NASDAQ's 1.5% jump in late June, Jabil could ride this momentum, especially if trade tensions ease and AI demand continues to surge. Jabil's combination of strong fundamentals, exposure to high-growth sectors, and a reasonable valuation makes it our first pick for July 2025. Keep an eye on their next earnings report for confirmation of their growth story. Next up, we have Palantir Technologies, ticker PLTR. If you're into AI and data analytics, Palantir is a name you've probably heard of. This company specializes in big data analytics, providing software platforms that help governments and businesses make sense of complex data. From national security to corporate decision-making, Palantir's tech is in high demand. Here's why I think Palantir is a must-watch stock for July 2025. Palantir has been a standout performer in 2025, with its stock gaining significant traction due to the growing importance of AI and data-driven decision-making. Their platforms, like Gotham and Foundry, are used by governments for mission-critical applications and buy businesses for everything from supply chain optimization to fraud detection. What makes Palantir unique is their high customer retention. Once a client implements their software, switching to a competitor is costly and complex. This creates a sticky revenue stream that's highly attractive for investors. In Q1 2025, Palantir reported 40% year-over-year revenue growth, driven by both government and commercial contracts. Their commercial market is expanding rapidly, which adds scalability to their business model. Analysts expect Palantir to maintain strong growth through 2025 and 2026, with revenue projected to grow at a compound annual growth rate of around 25%. That's impressive for a company already valued at over $100 billion. Now, let's talk valuation. Palantir isn't cheap. It trades at a forward price-to-earnings ratio of about 80, which is high compared to the broader market. However, this premium is justified by their growth potential and unique position in the AI and analytics space. Their operating margins are improving as they scale, and they're moving toward consistent profitability, which is a good sign for long-term investors. Plus, Palantir's government contracts provide a stable revenue base, which balances the volatility of their commercial expansion. Palantir isn't without risks. Its high valuation means any misstep in earnings or a broader market sell-off could lead to volatility. Additionally, their heavy reliance on government contracts makes them sensitive to changes in federal budgets or policies. That said, their growing commercial business diversifies this risk, and their AI-driven solutions are well-positioned for a world increasingly reliant on data. Why July? The market is entering Q2 earnings season, and Palantir's ability to deliver on its growth projections could drive further upside. Plus, with trade tensions cooling, thanks to a recent ceasefire agreement between Israel and Iran, investors are feeling more optimistic, which could benefit high-growth tech stocks like Palantir. Palantir's leadership in AI and data analytics, combined with their strong growth metrics, makes them a compelling pick for July 2025. If you're comfortable with a higher risk, higher reward stock, PLTR could be a great addition to your portfolio. Our third and final pick is CME Group, ticker CME. If you're looking for a defensive stock with growth potential, CME Group is worth a closer look. They're the world's largest futures exchange, offering a wide range of futures and options products, from interest rate contracts to cryptocurrencies. Let's dive into why CME Group is a smart buy for July 2025. CME Group thrives in volatile markets, and 2025 has been nothing if not volatile. With tariffs, geopolitical uncertainty, and inflation fears dominating headlines, demand for CME's products, like interest rate contracts and equity index futures, has been strong. Analyst Kevin Heel from Argus Research projects that 2025 will see elevated trading volumes in equity indices, cryptocurrencies, and agricultural contracts, all of which play to CME's strengths. Their ability to introduce new contracts keeps them ahead of the curve, ensuring long-term growth. In Q1 2025, CME reported solid revenue growth, driven by increased trading activity. Their business model is incredibly resilient because they make money from transaction fees, which means they benefit whether the market goes up or down. This makes CME a great defensive pick for investors worried about economic uncertainty. Financially, CME Group is a rock. They have a strong balance sheet, consistent cash flow, and a history of returning capital to shareholders through dividends. As of April 2025, CME's stock closed at $254.13, with a price target of $285 from Argus, implying about 12% upside. Their dividend yield is around 2%, which adds a nice income component for investors. The stock trades at a P/E ratio of about 23, which is reasonable for a financial company with such a dominant market position. On the risk side, CME's performance is tied to market volatility. If markets stabilize significantly, trading volumes could dip, impacting revenue. Additionally, regulatory changes in the financial sector could pose challenges. However, CME's global reach and diverse product offerings provide a buffer against these risks. July 2025 is a great time to consider CME Group because Q2 earnings season could highlight their ability to capitalize on market volatility. With tariffs on pause and the U.S. Court of International Trade reviewing their legality, investor confidence is rebounding, which could drive more trading activity. CME is well-positioned to benefit from this environment. CME Group's defensive qualities, steady income, and exposure to market volatility make it a fantastic pick for July 2025. It's a great way to balance growth and stability in your portfolio. There you have it, 3 stocks to buy in July 2025. Jabil Inc. for its tech and AI exposure, Palantir Technologies for its high-growth AI analytics, and CME Group for its defensive strength in volatile markets. Each of these stocks has unique strengths and risks, so make sure they align with your investment goals. What do you think of these picks? Are you bullish on AI stocks like Palantir, or do you prefer defensive plays like CME Group? Drop your thoughts in the comments below. I love hearing from you. We'll be back next week with more investing insights. Until then, stay smart, stay invested, and I'll see you in the next one.